Hello, everybody. This is Bennett Tchaikovsky, the accounting professor, and we're just doing a marathon here today on cash flows. So we're now going to do part 5, which is my advanced example number 2. My disclaimer and copyright notice, the information and opinions contained herein are those of myself and not by employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. This presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2023 by myself, Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Okay. So let's go through and how are we going to learn cash flows. So this is part 5. We've been kind of doing the same thing each time. But again, I really want to encourage you to watch the other videos, watch them on 2x speed, watch them slower, whatever you want to do. But there's a whole methodology to going through and doing these. So let's go ahead and look at our next example. So in this case here, our cash is going from basically 5 million down to 4,025,000, or a decrease of 475. So for this particular question, what we're going to need to go through and do is, as always, we want to go through and set up our cash, or set up our skeleton basically for our cash flows. And let's go through and get this going. Okay. So for our skeleton, we've got 4 and 20 days now. Statement of cash flows for the year ended 12/31/21. We're going to have cash flows from operating activities, net cash blank, operating activities, cash flows from investing activities, net cash blank, investing activities, cash flows from financing activities, net cash blank, financing activities, total decrease in cash. This is going to be 975,000, or it started at 5 million, went down to 4,025,000. So my total change in cash is going to be a decrease of 975. My beginning cash balance was 5 million. That means my ending cash balance will be 4,025,000. The last thing I want to go through and do is add in here non-cash transactions. Okay, so that's my skeleton, right? That's the first thing I always do. Because when I'm going through and doing this type of question, I know that I ultimately have to get to these numbers over here. And so that's where I go through and start. Okay, so I've got my skeleton done. We'll hide this until we get to later. Now what we're going to go through and do is we're going to create our big cash T account. So we're going to have over here, we're going to have operating, investing, financing. Those are going to be the sections on our cash T account. What we're now going to go through and do too is we're going to put in our beginning and ending balances in each of these accounts. Inventory went from 100 to 300. Prepaid expenses went from 50,000 to 75,000. Short-term investments decreased from 100 to 40. Land went from 100 to 25. Equipment went from 300 to 650. Accumulated depreciation, because this has a negative balance, it means it's a contra asset account. Over here, 50. Over here to 200. Remember, assets are going to have over here so assets typically have debit balances. They're increased with debits, decreased with credits. Liabilities and equity accounts typically have credit balances. They're increased with credits, decreased with debits. over here for my retained earnings. I will get to that in a momentarily. So this, but it's a contra asset account. So it's going to have a credit balance. Accounts payable is going to basically have a credit balance over here. Accrued liabilities went from 1.3 to 300,000. Unearned revenues went from 500 to 600. Bonds payable went from 0 to 650. Discount on bonds payable. Remember, a discount negative in the liability section means it's going to have a debit balance. Okay. Common stock at par went from 1 to 1. Additional paid in capital common stock, 199,999 to this. Retain earnings, 1,075,000 to 1,375,000. So that is our second step. We have created the T accounts for all the balance sheet accounts. We're now going to deal with the additional information first. So FDT and I had net income of 350,000. So what we're going to do over here, they add net income of 350,000. So that's going to show up over here in my retained earnings T account. Remember, what does the statement of retained earnings look like? Beginning plus my net income minus my dividends is equal to my ending. So right over here, you're going to show this over here is basically going to be a credit balance. And what we're going to do is we're going to do the opposite to cash. So I'm going to come over here in my operating section, and I'm going to go ahead and call this what it is. And this is going to be net income. So dealing with the additional information first, net income shows as an increase or a credit to retained earnings. I'm going to go ahead and do the opposite to cash. When I do the description on my cash side, I'm going to call this net income. On December 30th, I issued bonds with a face value of $550 and a stated interest rate of 5% for a $50,000 discount yielding proceeds of $500. What I'm going to suggest you do is you write this out as a journal entry. Let's go ahead and write this out as a journal entry. So whenever I show a bond payable, I always have to show the bond payable when I'm issuing it as a face value. Always is going to be over here. This will be at 550,000. Always show bond payable at the face value. Okay. Again, this is why this is such a great exam or great question for a final exam. The amount of cash proceeds I received from this bond is I got proceeds of 500,000. Now, when we have a bond that is issuing for less than face value, it means it was issued at a discount of 50,000. What I'm going to suggest we do is put this into the T accounts. So right over here, we'll give this a nice new color, a little bright green. So right over here, bond payable. And I'm going to add myself a line right in here. So I'm going to have bond payable for 550, right? And discount on bonds payable is going to be at 50. Now, what I could go through and do, or I might be tempted to do, is in financing is to show discount on bonds payable as a credit, bonds payable as a debit, but we don't want to do that. What we're going to do is we're going to show the cash proceeds, or right over here, and we're going to call this proceeds from bond issuance. Why is this going into financing? Let's go back through and remember our rules. Financing. I'm selling bonds, I'm buying back bonds, I'm selling stock, I'm repurchasing my own stock. This is all of our own stuff. I'm paying dividends, investing, buying and selling equipment, purchase a business, purchase intellectual property, sale of short-term investments, purchase and sale. So those are all going into investing. Everything else is pretty much in operating. Okay, so that's our next piece of additional information. So let's take a look at our next one up for bid. December 10th, we declared a dividend of 50 payable to its common shareholders. The date of record and the date of payment was December 30th. So if I have a dividend, where is that going to go? Well, dividend is going to go into the statement of retained earnings, right, as a debit. For every debit, I need a credit. When I'm paying a dividend, this is going to go into the financing section. And we're going to call this basically a payment of a dividend. Okay. So that's number 3. Let's take a look at number 4. On December 30th, 2021, I received $100,000 worth of equipment and exchange issued $100,000 of bond payable at face value. The bonds have a stated interest rate of 4%. So let's go through and do this journal entry. For this one right over here, I'm basically getting equipment. And I'm getting that equipment by issuing a bond. Okay. So for this one right over here, so I received $100,000 worth of equipment. I issued a bond. This is what we call a non-cash transaction. Very, very important. What do I do with non-cash transactions? Right? I'm going to do the journal entry, which I just did. I'm going to put it into the T accounts, and I'm going to disclose it in the bottom of the statement of cash flows. So let's come over here. So I'm going to show over here equipment, give ourselves a little bit more room. So my equipment is going up by 100,000. I'm also crediting bonds payable. This is also going up by 100,000, right? This is a non-cash transaction. So I want to avoid the temptation of inputting anything into the cash T account because this did not impact cash. So coming over here, the very bottom, when I basically say issued a $100,000 bond payable and received 100,000 of equipment. However you want to word it, if you want to copy what's in the description, that's absolutely fine. Okay, so we've done that last one, non-cash transaction. Let's now go through and start taking a look over here at our next phase. So we've dealt with all the additional information. We've dealt with that stuff right now. Let's go through and look at our next part. So now we're going to reconcile all of the T accounts. Accounts receivable, right? So I'm going to go a little bit faster on this. Go from 300 to 200. So I'm going to do the opposite to cash, or basically over here, when I describe it, I'm describing what's happening in the T account. If I'm crediting an asset, basically means it's decreasing. It's going to be a decrease in accounts receivable. Inventory went up by 200,000. So I'm going to do the opposite to cash, or I'm going to credit cash. This is going to be an increase in inventory, 200,000. Prepaid expenses went up by 25. I'm going to show this as a credit to cash. This is going to be an increase in prepaid expenses, right? These are all assets. The way I do it, I do the opposite to cash, and then I'm going to describe what's happening in the T account. If I have an asset that's being debited, it means it's being increased. Okay, looking over here, short-term investments. So over here in the investing section, right, that's where I'm going to go ahead and put this. In my investing section, I'm going to say sale of short-term investments. I'm going to do the opposite to cash over here at 60,000. My land went from 100 to 25,000. That means over here, I need a credit of 75. Over here, I'm going to do the opposite to cash. This is going to be sale of land. For my equipment, I had 300,000 beginning. I had a non-cash transaction of 100. My ending is 650. To balance, I need 250,000. I do the opposite to cash, and this is going to be a purchase of equipment. Okay, accumulated depreciation on equipment, right? This is one of our special ones, right? When we have accumulated depreciation on equipment, this is being increased by 150,000. I'm going to go over here and I'm going to do the opposite to cash in the operating section. What's very, very important though, is I need to make sure I'm calling this correct, which is depreciation expense. If I don't call it that, I will lose points. Accounts payable went from $1,025,000 to $240,000, or a decrease of $70.85, right? So I do the opposite to cash. This is going to be a decrease in accounts payable. Remember, accounts payable, liability account. It's increase with credits, decrease with debits. Over here, it's being debited. So this is a decrease in accounts payable. Accrued liabilities, this is decreasing by $1 million. So over here, this is going to be a decrease in accrued liabilities for $1 million. Unearned revenue, this went up by 100,000. This is going to be an increase in unearned revenue. This is going to be a debit for 100,000. My bonds payable, my discount on bonds payable, these are both balanced. My common stock at par, additional paid in capital common stock did not change. Over here, my retained earnings account is balanced, so I should be good to go. As a reminder, I need a decrease in cash of $975. So let's make that happen. So over here, I have total debits of 700. I have total credits over here of 2,010,000. I subtract the smaller from the larger balance. Because it's a credit, this is going to be net cash used in operating activities. Over here, for my investing activities, this is going to be net cash used in investing activities. Lastly, for financing, this is going to be, because it's positive, this is going to be net cash provided by financing activities of 450. To make sure I've done this question correctly, right? What do I want to go through and do? I want to go through and check my work. The way I can go through and check my work is I'm going to do a little T account right over here. Operating, investing, financing. Over here for operating, this is going to be a credit of 1,310,000. Investing was 115. Financing was 450. When I add up these different amounts, I subtract the smaller from the larger, I get a net decrease of 975, which is the answer I was looking for. So now that we've gone through and done this part, we've gotten our T account, basically our large T account, to balance. What I'm now going to go through and do is I'm now going to go through and basically fill out my skeleton. So let's go through and fill out the skeleton. And let's go through and do this right now. So over here, for my skeleton, what I want to remember as I'm going through and doing this is that if it's a positive amount here, it's going to show as a positive amount on the cash flow. If it's a debit, it's going to show as a positive amount. If it is a credit, it's going to show as a negative amount. So right over here, when I go through and add all these up, I'm going to get 1,310,000 used in operating activities. So that's what I want to go through and do. For my investing activities, got over here, sale of short-term investments, sale of land, purchase of equipment. Say if it's a debit, it's going to be a positive amount. If it's a credit, it's going to be a negative amount. So over here, My net cash used in investing activities is going to be 115. My cash flows from financing activities, proceeds from my bond issuance, payment of a dividend. So over here, this is going to be 500, and this is going to be negative 50,000. So my net cash provided by financing activities is going to be 450. When I add up these three amounts, I get to the 975. I'm done with the question. This is the 5th video I'm making in the series, right? And I'm now going at a much faster pace, right? So what you really need to do for all of these cash flow questions, you have to go through and practice. There is no substitution from getting out pencil and paper, writing out this stuff. I've been doing this for a while. I remember when one of my very first teaching gigs at University of California at Santa Barbara, when I had my students there, I was using T accounts to do cash flows. When I see instructors that do not use T accounts to do cash flows, I start cringing because I just don't understand. I don't know how you can do it otherwise. But again, this is the way that I do it. I generally get to that right answer. Hopefully you found this video to be helpful. If you want any other videos on this topic, I think what's really inspired me to make this video series is just because I did this question on YouTube yesterday. And the question that I did on YouTube yesterday, which is this one right here. So this video right here is like 53 minutes. And the way the question was worded, and I even had a comment from one of my viewers today, basically the way it was worded was just terrible. And it's not Wiley's, it's just the way they word stuff. It's just very complicated, and that's intermediate accounting. But that's really kind of the reason why I'm going through and making this video series here for you today. So, and anyways, thank you for watching. Please like and subscribe. If you have questions, feel free to email me at 1812cpa@gmail.com. And I look forward to seeing you on future videos. Have a great day.